Yeah, Powell opened the floodgates. So from the March lows, basically, Johnny, when the stock market went straight up until September, the credit market gave the green light. All is calm. What have you seen, though, since the bump started in September? And what are you seeing now and as we go later into the fall?
So the good news for the investment grade market is that its beta to the equity market has been reduced fairly substantively. And that, I believe, is a function of the Fed policies that were announced in late March, with the Fed for the first time announcing that they would intervene in corporate credit markets as part of their monetary policy toolkit. It changed the risk paradigm that exists in investment-grade corporate credit. And even though things have traded a little weakly in the last maybe 4 to 6 weeks or so, the movement in credit has been fairly modest overall. The flow dynamic in terms of the money that continues to flood in to investment-grade bond funds remains very, very strong. We've had a number of consecutive weeks of inflows. And actually, since the flow dynamic turned around in April, there's been more capital that's flown into investment grade in that short period than in any full year in history.
Are there any signs of stress, Johnny, at all?
I wouldn't say signs of stress, but there obviously are things that people are looking at. So there's been a well-documented story for a couple of years now that the proliferation of triple B credit in the investment grade market is greater than it ever has been. That remains true today. We also think about 50% of the investment grade credits that are out there today are on negative trajectory. And to use rating agency parlance, they're either on review for downgrade or have a negative outlook assigned to them. So the room for slippage is fairly small. And obviously in an environment where economic growth disappoints and earnings come in lower than forecasts are expected to, then obviously the passive leverage increase that companies will see as a result could come back to be a little bit of a risk factor, certainly as we think about 2021.
Johnny Fine, thanks so much for joining us.
Thank you for having me. Great to see you.
Shepard Smith here. Thanks for watching CNBC on YouTube.